Welcome back, 17th of April today. As you can see, got trading economics on the screen, and we had not a lot of data today. We had actually the NY Empire State Manufacturing Index, which came out extremely, or maybe extreme is the wrong word, but a lot more positive than expected. Right? We're actually in the positive integers rather than negative, and that's a big increase considering compared to the previous one, which was minus 24.6. It's at 10.8 right now. So a big increase in manufacturing over the last month, and I personally didn't expect such a big increase, and obviously the market's in. We're going to go through that as well. So if we go to JPY first, we're trying to play some buys during London, or at least around London. Didn't get anything, so then we tried to just wait for NY. So we're predicting GBP to continue going up overall bias. We actually just got a lot of consolidation. We pulled down, retested 165,800. And then just bounced around into the range of between 166,500 and 165,800. Didn't do too much in terms of movement, and we took a trade, but we'll show how we managed it. If we have a look at gold right now, I did expect personally, I expected a slight pullback in price to then continue down after a monster move yesterday, about 500 pips. Personally, I did see a pullback, like I just said, and I expected the data to come out a lot better than previous, but not this. I didn't expect it to be this positive. And as you can see, we melted again, down from 2010 to all the way down to 1981. So let's have a look and see where we went or where we executed. Okay, so as you can see here on the charts, we're looking at GJ on the right position right now, and we took a trade at 216. So just after the 4-hour opened, we waited for the 4 hours to close and a new one to open, and we were bouncing around in between 166,200 and 166,500. We took an entry once price finally broke out above 166,500, and in anticipation once we broke the highs, continue up with the solid USD data spilling over. And we did go up about 11 pips. We didn't move too much, and we just bounced around, and I closed around break even. I wasn't comfortable if once this high here that my cursor's on didn't break this, I wasn't comfortable because I expected it to maybe retest 500, which it did. Another entry could have been there, or a better entry could have been there, but it never broke this previous high that just created on the 1 minute, and I wasn't comfortable holding it. That showed to me there wasn't enough volume or bullish buyers, right, or enough buyers in the market to continue higher. Closed. Great trade management in my opinion. Entry was alright, maybe too aggressive, but I did expect once this new 4-hour opened to provide that volume. And actually, once NYSE opened, we did get a bit of volume, but then it actually went down, continued down. So managed well, and I thought, right, well, I understand USD is going to be moving extremely bullishly, right, compared to gold. So in gold terms, it's going to be bearish, right? USD is gaining strength, and once USD broke 102 on the DXY, so on the dollar index, we saw that that broke 102. I was like, right, this is going to continue going down to the next key level. We already broke this yet on Friday, so expecting at least to tap 1988 500. And what actually happened was we had a nice sales from above from 2010. You could have taken preemptive sales if you're expecting it. And what I waited for was, right, we got a break of 1997. We finally got below 2000, and I was waiting and waiting, and then I was waiting for a break and retest. We got the break, retesting, nothing yet. This bearish candle was like, right, nice. And once we broke these lows here that we just created from the previous push down, I was like, entry, stop loss, and continuation. So it was just under a 3-to-1. It was about 27 pips SL and about 70 pips roughly TP. So it wasn't quite a 3-to-1, about 2 and a bit to 1, which is not too bad. And I'm happy with the way this played out. There was no real significant scariness, if you want to say. It was quite a straightforward trade. USD and all the momentum was in our favor. The new 1 hour just opened at 3 o'clock. We entered at 3:02 or 3:03, and it was, pretty straightforward trade, right? It took about 35 minutes. Nothing out of the ordinary. I trailed my stop above these highs and then above these highs, and once price can break above them, tap, tap, bam. It actually did push another 70 pips, to be honest with you, in about 5 minutes, right? 10 minutes. But that's not the plan. I wasn't expecting that. I was happy to take profit there, and that's it. So overall, good day. And tomorrow, looking forward to seeing if we swap screens, we've got unemployment rate in the UK. So this is going to be an important figure to see how the UK's economy is doing, and we're going to anticipate that. I don't see this actually lowering. I expect it or anticipate this to be the same, if not worse. Nothing's improving from my point of view in the UK, and we're going to see this obviously tomorrow. So keep an eye out for that tomorrow morning and during London. But overall, I'm excited to see how the markets unfold. There is a lot of lower volume and volatility going into this week for some reason. Well, at least for Monday. I understand we have inflation rate as well on Wednesday, so that could obviously be causing a lot of weight or a lot of investors sitting on the sidelines to dictate or see how the Bank of England react on their next rate hike, especially with FOMC as well. So we're going to be looking out for that, and overall, keep on the sidelines. If the volume and volatility is not there, don't force a trade, but keep your eye out in the morning for that data event to be released.